Hello, this is Echelon Rethink, a short series covering how COVID 19 is changing business in Sri Lanka. Joining us today is First Capital Holdings Chief Executive Dilshan Wirasekara. First Capital Holdings is a leading investment bank and also runs one of Sri Lanka's largest non-bank primary dealerships for government debt in Sri Lanka. Now, COVID-19 has impacted almost every industry negatively. Capital markets are no exception because the underlying assets, which are the companies that have issued these securities, are likely to do far worse than we initially thought. Dilshan, thank you for joining us.
Thank you, Shamindra, and thanks for having me on.
To start with, can you tell us what's been the impact of COVID-19 on investment banking?
Yes, definitely the overall impact of COVID-19, I don't think can be assessed right now from a local perspective, or even if it's a company perspective. It's probably a bit too early to forecast and say, earnings are going to be affected by X percentage or business volumes will drop by Y. However, I think the capital markets broadly reflect fixed income as one element of that, and the equity as another. In addition to that, you have the asset management businesses and maybe the advisory, which is M&A related activity. If you broadly break it down, investment banking is across these sort of four spheres of operation. Anyone who's in the fixed income business is probably going to see a silver lining in this, where if you are long on bonds with interest rates declining, you're going to have capital gains that you would realize. We've been fortunate that the largest part of our investment banking offering is fixed income. About 90% of our revenues come from a fixed income base. So that has actually gone even better than we were expecting originally, because we were not forecasting an interest rate decline of this magnitude. But like I said, the government curve has dropped by 100 to 150 basis points. And obviously that has resulted in fairly significant gains for us as a company. The equities front is definitely far more riskier, far more difficult to operate in this environment. On top of that, you've also probably had a lot of pent-up selling demand, as since markets haven't functioned freely, that you have a build-up selling pressure of investors wanting to cut positions and maybe de-risk portfolios. Asset management side of the business, where essentially we run unit trusts and private wealth management portfolios, again, we've seen some withdrawal, some shift because of risk averseness. Again, when things like this happen, everyone takes a very sort of safe haven attitude to your investments. You want to preserve cash. You rather not take a risk on credit. So there is a shift into government securities or risk-free asset classes or low-risk asset classes that people sort of tend to do. And we've seen that happen. So we estimate probably 20-30% drop in volumes of funds managed by companies there due to people just shifting and sort of lowering the risk profile of their investments. In terms of the advisory aspect of work, which is the M&A, the sort of investment banking that we see happen overseas more, not so much within Sri Lanka, there I think probably again for a period of 2-3 months you might not see a lot of activity, but after that, you're going to have a lot of companies maybe out of funding constraints, liquidity issues, revenue drop, that they will need some form of either sort of borrowings or capital infusion, or maybe even looking at selling parts of businesses or disposing businesses. So there again lies an opportunity.
Once you have addressed the immediate crisis, I'm sure you'll be looking at how to transform the business for a post-COVID world, right? What are the priority areas for that transformation?
I think being able to digitally reach your market, your consumer, and being able to allow them to transact as normal with you is going to be key in this, nothing else. And that, I think, relies a lot on your IT infrastructure of what you have as a company. So I think the companies maybe who have invested in IT infrastructure in the past, who have superior capabilities, are the ones who are going to really probably do better, or at least adapt faster to this new normal, and being able to do it. So in that respect, I would say we are sort of halfway through that journey.
Do you think the capital market ecosystem is ready to adopt this technology you think it now needs?
I think we are not ready. We are probably a fair distance away, Shamindra. Some aspects of that. So, for example, if you take again the government securities market as a standalone, that is quite ready. I mean, that is currently functioning as normal. Investors are able to come and go as they please. Payment systems are sort of happening. You have sort of what we call a DVP system, a delivery versus payment system, where transfer of security and settlement for that happens on a platform simultaneously. There is no settlement risk. There's no risk of default in terms of you paying for a bond and not getting delivery of security. However, when it comes to our equities and other capital market related products, it's not. And it has been in the works for quite some time, but unfortunately we don't. So as a result, we have some additional risks that are there, which are over and above maybe other capital markets. So we don't have a central counterparty settlement system. We don't have DVP. As a result, we run essentially settlement risk in our equity market. So it just takes, one bad transaction, one settlement to go bust, that then undermines the credibility of the entire system. So to answer your question, most of our capital markets are not ready for this, with the exception of our bond market, which I think is the only one that is able to function smoothly. So it's important that we can maybe expedite the implementation of those infrastructure measures that have been in the works for a long time. So it's not that we don't know what to do to get there, and we've been having this discussion around it, but we've really not got down to execution. So it's important, I think, we do that fast. That then gives ability for people to access those part of capital markets also in a fairly seamless manner.
So this appears to be more than a mere technology challenge. It's also a legal and regulatory challenge for the capital market, right? So what can market participants do to make this investor journey smoother and price discovery more efficient?
More than the investors per se or the intermediaries, Shamindra, first roadblock has been the regulatory environment. So I think the legislature that is required to be able to do that needs to come, and that's right from the top. So I think if you look at the demutualization of the Colombo Stock Exchange, to the new SEC Act that was sort of brought into force during the last administration, never really was passed by Parliament. Even though it was presented to Parliament, it was never taken up for debate. It was never passed. So it's still stuck there. So I think it's a sort of top to bottom approach that needs to be followed. So we need the sort of legislature, the regulatory aspects of it to come first, and then thereafter, I think the market players, intermediaries, investors can play their part. But first, that has to happen. From a investor perspective, I think most of the market participants, investors, the intermediaries, when you say capital market intermediaries, you're referring to the investment bank, the fund managers, the stockbrokers, so on and so forth. I think most of them are ready for it.
So, how quickly capital markets can recover from COVID impacts is still unclear. But Dilshan Wirasekara is suggesting the priorities are to address the regulatory shortfalls so that when they are ready, investors can participate in these markets with all the safeguards available in the rest of the world. Thank you, Dilshan, for joining Rethink. Echelon Rethink, powered by ACCA Sri Lanka. Is your organization an ACCA approved employer? Apply now and make it easy to recruit the best finance professionals in the country.